Cost and Management Auditor, and today we are going to discuss about one of the very serious offenses, one of the very serious problems that has been faced by the Indian economy. And it has not been a problem only of Indian economy, it has been a problem of the world economy as well. It's a problem of world economy as well, yes. And this is the problem of money laundering. Today we are going to start anti-money laundering steps which have been taken. Money laundering. So, how many of you know about money laundering? What do you mean by money laundering? How many of you know about this concept of money laundering? Let me ask each one of you. If you have any prior information about money laundering, please tell it in the chat box. Please write it in the chat box. If you have any prior information or knowledge about this concept known as money laundering. Okay, here's my pen. Yes. Please tell me, what do you mean by money laundering? Money laundering. And laundry word you are aware of, huh? Laundry. Laundry word you are aware of. What is laundry? If you are aware about this concept, please write in the chat box. If you are aware about this concept, please write in the chat box. What do you mean by money laundering? Convert black money into white money. Okay. Okay. So the answer which has come is converting black money into white money. Very good answer. This is known as money laundering. Yes. Now I'll tell you, I have written two words on the screen. Okay. There are two words on the screen. One word is black money. One word is money laundering. Both the words have absolutely different connotations, different meaning altogether. Many students confuse these two words. Therefore, they are not able to understand what is the difference between these two words. So, these two words should be understood in a very different way. Their meaning is different, their implication is different. So, let me first of all, because we are focusing on money laundering in this particular chapter, but I want you to know what is the difference between black money and money laundering. What is the difference that I definitely want you to know. What do you mean by black money? Black money means the money on which tax has not been paid to Government of India. The money on which tax has not been paid to Government of India. So suppose there's a shop, okay, there's a mithai shop which is located in, say, Rajouri Garden. It's in Delhi, okay. This mithai shop is located in Rajouri Garden. So in a particular day, this particular mithai wala, this particular sweet shop earns two sort of income. This particular mithai shop earns two sort of income in a particular day. Okay, what are those two incomes which this mithai wala earns during the day? Number one, he receives Paytm or UPI from many people. Okay, because usually when we go to mithai wala, we order golgappe. We want to have golgappe. We want to have dahi bhalla. We want to have dosa, we want to have paniyaram, we want to have idli, and raj kachori, we want to have raj kachori or samose. So whenever we want anything from the shopkeeper, we ask him, Bhaiya, please show us the QR code. We want to know the QR code, we will pay online. We don't have cash. Okay, we say that. Okay. So one sort of income which this person earns in a day is from Paytm. Paytm is received. Suppose in Paytm, in that particular day, he received 8,000 rupees. 8,000 rupees this person received in Paytm or UPI in that particular day. So, this is actually the money which came to his bank. Okay, this mithai wala's bank. This is known as white money. Of course, it is received in bank. Therefore, he has to mandatorily pay taxes on it. Okay. And since Haldiram's, okay. So since he has to pay mandatorily, he has to pay. But the point is, Haldiram doesn't have rooftop top cafe where you can sit in an open air and enjoy your food. So that is also essential, for today's people. That is essential that, you want to sit on roof terrace kind of a restaurant. They want to sit. They don't want to sit in covered places. Even if it's scorching heat, even if it's too much sunny, then also they would prefer to sit on the terrace rooftop. That is the problem with Haldiram. Haldiram doesn't have rooftop. Anyway, we are talking about this mithai wala, this sweet shop which is located in Delhi. Okay, in Paytm he received 8,000 rupees, and 8,000 rupees is received in Paytm. Okay, rest amount he received in cash. Many people pay in cash also. Some amount he received in cash. So the cash which he received in the entire day was 5,000 rupees. 5,000 rupees is the amount which this person received in cash. So in total he received 8,000 rupees plus 5,000 rupees, 13,000 rupees in cash in total. His total revenue for this day is 13,000 rupees. Ideally, this person should show entire 13,000 rupees in its profit and loss account as sales, as turnover, and he should deduct all the expenses which have been incurred on these amounts, on this revenue, and should disclose it to Government of India. This should be the ideal situation. But what does people do? Okay, usually what does people do? People do not disclose this cash earning which they receive to Government of India. They do not disclose 5,000 rupees to Government of India. They evade GST, they evade income tax from this 5,000 rupees which they have received. Although it's their legal income. This is their legal income. Okay, this is not an illegal income. They have earned from a sweet shop or a hard working. They have worked hard for this particular income. So this is actually their legal income. It's not nothing illegal in it. Okay, but still they don't want to pay tax, or they want to save some bit of the tax. So they would not show this cash to Government of India, and they would say to Government of India, oh Government of India, we received income of 8,000 rupees. And this 5,000 rupees they will use for their own expenditure. They will use for their own whatever expenses they are incurring in their business, they would use on their own for those purposes. So that is the scenario where people accumulate some bit of earnings where they do not pay taxes to Government of India, and they hide those earnings from Government of India, and then they use those earnings for things like their routine expenses, or they would spend it on something or the other, but they won't disclose it to Government of India. So this is the concept of black money. This is the concept of black money. So part of the income they hide from Government of India. They do not disclose it to Government of India, their part of income. This is known as the concept of black money. What if earned from illegal source and paid tax on it? I am just coming to it. Hole hole ho jayega pyar baliye, hole hole ho jayega pyar. So just wait, relax. We are just coming on to it. We are today going to discuss the most interesting topic of your syllabus, guys. Most interesting. And I am going to give you such brilliant examples that I have faced in my life, that I have seen in my life, and I'll give you all those examples only. Just wait, hold on. I will show you everything, every aspect of this particular menace which is affecting our economy, which is affecting world's economy. This is not only Indian problem, this is world's problem. Okay, this problem is greater. This is a small problem, this is a bigger problem. Okay, so currently I'm discussing about the small problem. So Government of India wants you to disclose your total income to Government of India, and pay taxes on it, recognize it in your PNL account, recognize it in your income tax statements. So government wants you to show all this income in the profit and loss account, in the income statement, which they they would show you. So yes, this is the concept of black money. So this 5,000 rupees becomes black money for this shopkeeper. This 5,000 rupees is black money for this shopkeeper. Of course, it is not legal. Income Tax Act can take recourse on it. They can, if they find it. Okay, what will people do with this black money? If it is huge, they would hide it in their sofa. Yes, many politicians have been raided. Their homes have been raided, and their sofa, which is cushioned, okay, under the cushioning of the sofa, there are bundles of notes which have been found, which has been unearthed as a proof of a black money. And not talking about politicians, but talking about a big businessmen. So big businessmen would hide their money which they have earned from their business from Government of India to ensure that they pay less taxes. They pay only taxes on the amount where the amount is disclosed to government of India, only that is subject to tax. They make sure that, okay. Yes, फिर ED की raid होगी. Yes, ED Enforcement Directorate is very active in raiding such people. And if you don't spend this money, if this money is stocked with you, if you don't spend this money, then obviously government of India is going to ask you certain questions. Government of India is going to ask you certain things which, if unanswered, if remain unanswered, then you will be in a problem. This is known as the concept of black money. This is known as the concept of black money. Now let us come on to the concept of money laundering. What do you mean by money laundering? It's a next level crime, even greater than black money. I'll tell you what you mean by money laundering. So this is India. This is the borders of India. Okay. If you focus on the South Indian portion of the Indian subcontinent, if you focus on South India, like you focus on state of Tamil Nadu, Andhra Pradesh, Telangana, the entire south belt, Odisha for that matter, yes. So if you focus on this south and eastern portion of India, this portion has got superb, amazing and many temples which have got very minute carving and architecture. You might have seen in photographs, you might have seen in videos about these temples. These temples are huge and these temples are very beautiful. If I am able to catch hold of some of the temples, I'll tell you what kind of temples am I talking about. There are many temples which are there in this kind of setup. So temples of yes, so these are the big temples which are located in states like Bhubaneswar. Okay, if you see Bhubaneswar, then you will see such kind of temples which are there in Bhubaneswar. So Bhubaneswar is the temple city of the world, of India. It has got maximum temples. Maximum temples are there in Bhubaneswar. So yes, Lingaraj temple, there's a very famous temple, Lingaraj temple, which is there in Bhubaneswar. So the typical trait of these temples is that I'm not opening the video deliberately, because I don't want, if I put this video on my YouTube, then it will throw me a strike, copyright strike. So I'm not opening any video. So I'll open Google and I'll show you some of the pictures of these temples of South India. Yes, these are the temples of South India. Okay, if you really look at them, these are huge temples where the walls are all covered with, they are all covered with these idols of various human beings, various gods, various animals and several other things. And these temples are also laced with many such idols. Many such idols are there all around these temples. If you go inside these temples, then there are statues, beautiful statues of some ancient girl who's dancing, or someone eating some food, someone giving some some anjali to some god. Beautiful statues are there and beautiful architecture is there, and these statues are absolutely stunning, and they are so large in numbers. I mean, there are lakhs and lakhs of statues which are there in all over the South India. These statues are there, and very ancient monumental statues, beautiful statues, very minutely carved. Each and every feature, like eyes, like hands, like feet, everything will be clearly visible in your entire body. That is how fine these statues are of South India. So these are the South Indian temples where there are huge statues like this. Okay, and they're actually beautiful. They're actually beautiful. Okay, now someone does a very wrong thing, and this used to happen 10 years back, 20 years back. This was a very very bad crime which used to happen in India. Now it has reduced a lot. Now it is not the case, but earlier it used to happen. What were people doing? People were scratching these idols from the temples and they were selling it to outside India. This process is known as smuggling. They were scratching these, they were pulling out by using some tools. They were pulling out these statues from these temples and they were selling it to outside India in an illegal manner. and one statue used to sell for as high as 1 lakh rupees, 2 lakh rupees, 5 lakh rupees, 10 lakh rupees per statue. And imagine, lakhs and lakhs of statues are there around South India in such temples. Some of the temples are not even guarded by guards. There were no guards. So what were these smugglers doing? Smugglers were snatching, scratching these, these statues from temples, and they were selling it to outside India. There's a huge market in the Western countries like Europe, like USA, like all the developed nation. There's a huge market for these statues because they use it for their decoration purposes. They don't have this architecture in their country, so they use these statues as decoration purposes. And one statue used to fetch this particular smuggler as heavy as 5 lakh rupees or 10 lakh rupees per statue. This was the rate of the one statue which was being sold to outside India. For many years, this profession flourished in South India. Okay, this was illegal activity which flourished in South India. People got huge money. People earned huge money from outside countries, from all over the world, for selling these statues, and huge money was collected in in cash. Obviously in cash. This was not bank transaction. These were not given in bank. These were not given in some formal UPI or some online mechanism. This was absolutely a dealing which happened in cash, pure cash. These cash were delivered to the Indian smugglers. Pushpa and Rocky Bhai, heroes of South Indian movies, also used to do smuggling. What are you saying? Do you say anything now? So this smuggling business flourished in South India for a very long time, and it was a huge business in South India. And yes, South Indians sold lakhs and lakhs of idols and statues which were present in the monumental buildings and monumental places. Obviously at that point in time, 20 years back, the places were not guarded. There were no guards. No one used to take care of these things, because India has these things in abundance. When someone has these things in abundance, then you sometimes become a little careless about your monuments. But yes, now for last 10-20 years, when Archaeological Survey of India, ASI, has become really strong, and they protect all the monuments of the country from being damaged by any unscrupulous body. So now active steps have been taken, now strict steps have been taken so that all these things can be stopped. Now there are mechanisms where these things will be stopped in a very strong manner. But back then there were no such mechanism which could stop it. For many years this thing happened. So these smugglers earned a lot of money. One smuggler had 5 crore rupees or 10 crore rupees cash in their home. But the problem with this money is these smugglers had no business. They had no business. So what would they justify? If they go to buy a house, say they want to buy a house, okay, and house is worth 2 crore rupees. These smugglers have 5 crore rupees in cash. They can buy the house, but they cannot show to Government of India from where they acquired so much of money. They can buy this house, but entirely in cash. The other party would say, no, I don't want cash. I want some amount in bank also. Right? But they don't have any bank accounts. They don't have any money in bank, and they cannot deposit such huge amount in bank for sure. So the problem with money laundering is not taxes. They don't want to save taxes. Problem is they cannot disclose this money to Government of India. In black money, these people can easily show this money to Government of India. Look, this is my business income only. There was no problem at all, but they want to evade taxes. But objective over here is not to evade tax. Objective over here is to make this illegal money into a legal money. That was the problem with these smugglers. Because what would they do with this 5 crore rupees cash in hand? What would they do? They cannot buy anything. They cannot travel. They cannot buy car. They cannot buy home. They cannot buy land. What will they do with this money? Will they eat it? No, they cannot eat it, no. So this entire money was a waste for people who earned this money using illegal sources. Using illegal sources, if they earned this money, it was a waste for all the people who were earning money from illegal sources. For a person who's earning from legal sources, there's no problem at all. He pays taxes and his money is shown to Government of India. So there's no problem with the person who's earning the money through legal sources. But a person who's earning the money through illegal sources, there's a problem with that kind of a person. He cannot invest this money anywhere. He cannot invest this money anywhere. Sometimes what happened then, dealings happened. Dealings happened means a house worth rupees 2 crore. The seller would demand 3 crore for this house if they paid entirely in cash. Yes, they could acquire the home, they could acquire the house, okay, but the seller would demand 1 crore rupees extra because you are paying entirely in cash. So they were in a huge loss if they acquired property. And there was another scam which happened, Benami property. Benami property means sometimes the property is not registered in the name of the true owner. True owner doesn't, register property in his own name. Benami property. This property was not in anyone's name, but the owner was this person who never disclosed its identity to Government of India. These were also scams which happened during that time. So yes, this particular person can use this money for owning something, owning some property, okay, or he can also buy some gold, but effectively he cannot use this money for any legal sources. He cannot use this money for any purposes which is in white. He is desperate to pay 30% taxes. He is very okay to pay 30% taxes. He's saying, I'm fine if I want to pay 30% tax, it's okay. I'm ready to pay 30% tax. You take education cess from me, you take surcharge from me, you take whatever from me, but please convert this money into white. And soon as he is asked the question, what is the source of this money, he is silent. So even Income Tax Act cannot turn this money into white because he is silent, because source of money is mandatory to be explained to Income Tax Department. Where did you get this money from? Remember section 68, 69, cash credits. You have some cash credit, you have received some money, but you don't know where is it from, what is the source. You cannot disclose it to Government of India. That's the problem. So the problem with illegal money is that the source cannot be disclosed, and that was the biggest problem which all these people who were earning black money in India or entire world, not only India but entire world, face the same problem. They used to own property, yes, but they didn't used to own property in their own name, or they have to hide the ownership of property from the Government of India. They don't want Government of India to know that they have owned a property, so they will hide it by asking some relative to buy it for them or some other means, okay. So yes, the problem with money laundering is that it is not tax which is required to be saved. It is not tax which they want to save. They want to pay taxes. It's okay. We want to pay taxes, but they want to convert this black money into white money because they are not able to use this black money at all. So what in effect they are doing? Have you seen laundry at your home? Have you seen your washing machine? Do you have a washing machine at your home? Fully automatic washing machine? Yes. What does washing machine do? Washing machine, if you throw your dirty clothes inside the washing machine, they will come out as clean, they will come out as neat, okay. So these guys wanted a mechanism, wanted a washing machine that can wash their money and can cleanse their money, which can clean their money. They wanted a source like that. So what is the concept of money laundering? Money laundering means finding such sources which cleanse your money, which makes your dirty money into clean money. That is the scam or the scheme of money laundering. This is the scheme of money laundering. So sir, how can we cleanse our money? How can we make our dirty money into clean money? I'll tell you some very simple, a very simple example, okay. How many of you have been to Murthal? Okay, there's a place near Delhi which is known as Murthal. Murthal is a place in Delhi where there are a lot of roadside dhabas which are located on the highway. This is the highway. Okay, this is the highway, and on the shore of the highway there are roadside dhabas which are located, big dhabas, okay. People come there at night to have some food. They enjoy pleasant evenings in this dhaba to enjoy some food. There are many dhabas, many dhabas are there, okay, and people come over there to enjoy food, right. I have 5 crore rupees in my kitty. That's where CMA came in picture. That is very true. These ideas maybe would be generated in minds of C or CMA only, of course, naturally. All right. Now the concept is that in this Murthal dhaba there are many dhabas which are there. Dhaba means eating joints. not well structured eating joint, not restaurants, but some very local eating joints where they serve delicious parathas, they serve white butter, they serve dal makhani, they serve all the North Indian cuisine, beautiful, very tasty North Indian cuisine they serve alongside the road of these Murthal highway, and you can enjoy your food alongside this road, which is a highway road where you can see trucks crossing and cars crossing, and you can enjoy your food. I have 5 crore rupees with me. I have 5 crore rupees with me. I'm a smuggler. I have 5 crore rupees with me. I'll approach owner of this dhaba and ask him, Mr. Dhaba owner, please tell me what is your annual turnover? What is your annual turnover? This dhaba owner tells me that my annual turnover is 60 lakh rupees per annum. I earn 60 lakh rupees annually. Then I ask him, dhaba owner, please tell me, do you earn it in cash or do you earn it in Paytm or UPI? So dhaba owner tells me that it's a mix. Some people pay through Paytm, some people pay through cash. So it's a mix. I said, okay. I told the dhaba owner that from next year, you will show 20 lakh extra revenue. And you will claim to Government of India that I have earned 20 lakh rupees worth more in cash. Government of India is never going to find out whether you have earned it through true customers or whether I have given it to you. I will give you this 20 lakh rupees. You showed to Government of India that, I have earned this 20 lakh rupees. You deposit it in your bank account and then you transfer it to me. You deposit the amount in the bank account and then you transfer this amount to me. So dhaba owner, asks me, sir, but this will entail my income to rise, right? And I have to pay taxes. Taxes are worth 30%. So I tell him, no problem. When you return this money back to me, you deduct 40% of amount. So 8 lakh you deduct and 12 lakh you return it to me. 12 lakh amount you return it to me. I'm fine with it. But tell Government of India that I'm earned 20 lakh rupees excess in cash. And that is how my black money is converted into white money after paying the due taxes to Government of India. I paid due taxes to Government of India. Approximately 40% is the tax rate. I paid due taxes to Government of India and my black money has converted into white money. Now at least, okay, I am at a loss of 8 lakh rupees, but at least I'll be able to do something with the 12 lakh rupees. I've turned my illegal income into legal income. Then I approach another dhaba owner. I ask him, what is your income, dhaba owner? He says, my total turnover for the entire year is 1 crore 20 lakhs. And yes, these dhaba owners earn this kind of money, guys. I'm not hypothetically stating these figures, okay? These dhaba owners are very rich, super rich people, okay? So this dhaba owner tells me that my earning is 1 crore 20 lakh rupees per annum. So I tell him that from next year, you will disclose 30 lakh rupees extra and you tell Government of India that I have earned this 30 lakh rupees in cash. You deposit this amount in your bank account and you tell Government of India, I have earned this money in cash. And again, the same process. You deduct 40% from it and you give me 60% back through my bank account. I want it in my bank account. Then he will ask me, sir, why am I transferring this money in your bank account? What is the purpose? How would you show? Why are you transferring this money back to me? How will you show it? So we will tell Government of India that I am providing some services to you, interior decoration services or chef services. I am providing chef services to you, or I am supplying some, plastic furniture to you, or any kind of service. Service doesn't mean any inventory, okay? Or we will tell Government of India that I am supplying some sort of, entertainment services to the dhaba, and that is why you are paying this money to me. We will tell everything. We will tell the Government of India that I am an entertainer. I am a magic show presenter. I present magic show to people, and therefore people get entertained, and you are paying this money to me because I am a magic show presenter. We will tell to Government of India any of this fact. Okay, so any expenditure will be disclosing over here, and that expenditure will be disclosed to Government of India, and that is how the money will be transferred back to me. And of course, GST implication will also be there. GST will also be applicable on this particular amount. So that amount, to that extent, that amount will also be reduced. So this is one of the techniques how your illegal money can be converted into legal money. I'll tell you another technique, okay? One more technique which is there. I'll tell you another technique, okay? So I have 5 crore rupees cash in my kitty through illegal means. I have 5 crore rupees cash, okay? What I do is, I find my relatives, some 10-20 relatives I find out, who don't have any income right now, who are just sitting idle. And I even find some friends or some, cousins of mine who are not working anywhere, who are not doing any kind of work. I find all of them, okay? And, in each of their account, I deposit 10 lakh rupees cash. In each of the account, I will deposit 10 lakh rupees cash. And we will claim to Government of India that, some of that person is doing some stitching work, providing some services, or, any sort of activity they're doing. They're working somewhere, they're employees somewhere, they're employed somewhere. Or we can show to Government of India that yes, all these relatives of mine are doing some work or the other. Taking tuition classes, taking coaching classes. So yes, guys, I was telling you another method of laundering the money, converting your black money into white money. You have multiple relatives, and you can deposit a certain amount which is below the taxable limit in the bank accounts of each of the relatives, and there you are actually converting your black money into white money. This is another mechanism whereby some people convert their black money into white money, and there are multiple such ways of converting your black money into white money. Chalo, I'll tell you one more way which comes into my mind. And this is another way of converting your black money into white money, and the way is hawala transactions. You must have heard about hawala transactions, okay? Hawala transactions. What do you mean by hawala transactions? Suppose I have 20 crore rupees in hand in cash. I have 20 crore rupees in hand in cash, right? What I'll do is, I'll transfer this 20 crore rupees to a foreign country. I'll remit this 20 crore rupees to a foreign country using illegitimate sources, not the fund transfers or Western Union money transfer. No. Not through bank. No. There are other hawala transactions which happen. Some people would, take 20 crores from you in India, and then they will deliver the 20 crore rupees in Dubai dirham to whoever you want in Dubai. This is what is happening in the hawala transactions. So in case of hawala transactions, again, your money which you earned in India through black sources, okay, through wrong sources, you earned this money in India. That money you are remitting outside the country, so that from outside the country. Now what you will do is, suppose your money reaches Dubai, okay, so from Dubai you will infuse this money into an Indian company. You will buy shares of an Indian company and infuse that money in this particular company. This company is a shell company, so you get your money back in form of share capital, and you can do whatever you want from this money. This is a private company, so no one is going to ask you what are you doing with this money. So it's a privately held company. This is another way of laundering your money. So you send your money outside, and then you infuse it into India using some illegitimate sources, using some unauthentic sources, like having a shell company in India. This is another way of laundering your money. So there are many such schemes, guys. I cannot, I think I want some 1 week or 2 weeks time to tell you all the ways in which this money laundering business happens in India. Not only in India, but worldwide. In the entire world, this money laundering business happens, and they're not bothered about taxes. They don't want to not pay taxes. The idea is not to pay less tax. They want to pay full tax. In fact, they are urging Government of India, you take more taxes from us. You take 30% instead of 30%, you take 40% taxes from us. We don't have any problem. But please don't ask us from where did we earn this money. What is the source of money? Please don't ask us that. That they are not able to tell. However, in case of black money, the genuine black money, source is very clear. There's no problem in source of earning the money. However, in money laundering, source of income is not there, and therefore the problem is more grave. So what is a more rampant problem? What is a more grave problem? Money laundering is a more grave problem. Money laundering is a more rampant problem, more aggressive problem than black money. And this particular thing is actually harming countries, harming economies, because economies which thrive in white money, which thrive in having some good some good sources of money, which works hard. Such people would derive money from wrong sources and they would harm the economy. They are harming the economy. Such people are harming the economy. They are entering into illegal activities, thereby destroying the culture, destroying the vintage, the heritage of the country. They are destroying everything inside the country, and they are using that money for illegitimate sources. Same happens with terrorist activities, guys. You must have seen terrorists who are attacking into India, and mostly from Pakistan area, terrorists are coming in and attacking into India. Guys, those guys also have funding from unverified sources. They get money from unverified sources. We don't know where are they getting money from for buying this RDX, for buying guns, bombs, everything. But they get Indian rupees in huge quantum. So this money laundering thing is also used for funding terrorism in India or entire world, not only India but entire world. Terrorism is also funded using this concept of money laundering. Illegitimate sources they get money from, and they just transfer that money using some mechanism to Indian economy, and then they use it for terrorism purposes. Terrorism is again a byproduct of money laundering. Yes, that is also one of the nuance of money laundering. So money laundering is a very wide criminal activity, and it's not only a financial economic criminal activity. Like black money is just an economic criminal activity. It's a financial criminal activity. It is not a very nationwide criminal activity. But money laundering is a criminal activity which is actually destroying the nation. It is destroying the entire ecosystem of the country. It is just destroying economy of the country. It is destroying culture of the country. It is in fact developing unrest in the company, because terrorism is something which is absolutely unacceptable and happens. Thousands and thousands of innocent people loses their life because of terrorist attacks in India. How can we not remember Pulwama attack which happened in India? How can we not how can we forget the Delhi blast which happened in Lal Killa? How can we forget the Karol Bagh tragedy which happened in Delhi, the Karol Bagh blast? Mumbai blast, way back Mumbai blast happened. All these activities are funded by these illegitimate sources only, these illegitimate money which is flowing into the Indian economy and getting merged in the Indian economy. This is the source of funding of terrorist activity also. So yes, I just want to explain you the difference between money laundering and black money, so that you are aware about both these terms, and the distinction between those two terms you are absolutely aware about. So this thing is what I want to tell you. Now let us start our discussion on money laundering. Our discussion on money laundering. So yes, this is a pictorial representation of what money laundering is all about. Dirty money is put into a washing machine, okay, and clean money is extracted out of that washing machine. So dirty money put into washing machine and clean money is extracted out of washing machine. This is the entire concept of money laundering. So hiding money earned through criminal activities at places where they appear to be legitimate, where they feel that it's a legitimate money. This is known as money laundering. It's a big financial crime. Okay. Then harmful effects of money laundering. It converts black money into white money. That's a very big economic loss. Then illegal money into legal money. It converts illegal money into legal money. It is deterioration of administration order and economic stability. Our administrative order deteriorates because our country's security is at stake. Our country's economy is at stake. So many things are at stake because of this money laundering. Terror financing. Yes, terrorists are financed using this money laundering concept a lot. Then destruction of shareholders' value. Shareholders loses their value because of money laundering. So what is the definition of money laundering? Definition of money laundering, it is type of a financial crime. It involves hiding of money earned through criminal activities or some illegal activities. Criminal or illegal activities. Yes, criminal activities are also illegal, obviously. At such places where they'll appear to be from legitimate sources. We will hide this money at places where they will appear to be from legitimate sources, from authentic sources they will appear to be there. Conversion of black money into white money. We, using this technique, we convert our black money into white money, and we convert our illegal money into legal money. That is also known as money laundering. Importance of money laundering. To fight money laundering, it saved hard-earned money of taxpayer. Taxpayers' hard-earned money is wasted because of money laundering. Our money is going, wasted because of this money laundering, because undeserving people are able to, use the resources which they don't deserve. Then fight terrorist financing. Terrorists are being financed using money laundering techniques. So to fight it, we need anti-money laundering laws in the country. Very strict anti-money laundering laws are required. Then compliance with regulation require financial institutions to monitor customers and transaction and report suspicious activity. Very, very important. The banks should play a very important role in money laundering, in analyzing money laundering. Banks should play a very important role. So as I told you, there is a possibility that I will ask my various relatives to deposit 10 lakh rupees each in their account for the entire year. Now, banks should be absolutely vigilant that in an account where since inception of the account there is no money which is being deposited. Now, what is the source of this money? Where is this money coming from? Bank should be vigilant. Bank should be a little more introspective in this respect, that if any in any account there is a lot of cash being deposited, that bank should take steps or should ask the account holder that where are you getting this money from. Bank should be able to investigate. So yes, the financial institutions, that is banks, should monitor the customers and transactions and report suspicious activities to Government of India. You must be aware about KYC, know your customers, and that concept has emerged in Indian banks because of this anti-money laundering only. Because there was huge cash deposits which happened in bank accounts, and cash withdrawals was also there which happened in bank accounts, and sometimes bank did not have any clue about who is doing it. Who is the owner of this bank account? Bank did not have any clue, because people used to submit fake documents while opening their bank accounts. There was no KYC norms earlier. So people used to use banking channels to transfer this money from one account to another account to another account to another account, thereby reducing the the credibility of this money. Thereby, this entire money was being lost. So yes, KYC norms have been introduced by bank to ensure that we know about the customers who are using the bank accounts. We know about the people who are using the bank accounts. Protection of brand reputation and shareholders' value of the institution. So our brand is at stake. When anti-money laundering happens and it is connected with some brand, the brand is at stake. The brand actually goes for a toss if any kind of this mischievous activity is found out. So yes, our brand reputation depends on anti-money laundering laws, and shareholders' value should also be increased. Shareholders' value should also not be hampered because of this money laundering concept. Then avoidance of civil and criminal penalties. So to avoid civil and criminal penalties that could be levied because of miscompliance or negligence, we need the anti-money laundering laws. So there might be some penalties which will be levied on you if you don't do KYC in your bank. So bank gets freezed. If you don't do KYC in your bank, bank gets freezed. So yes, all these activities needs regular monitoring, regular update, regular compliances, so that you don't get to see any penalties on you. Now, what are the methods of money laundering? How is money laundering done? Okay, so what are the methods of money laundering? How is money laundering done? It is primarily done into 3 steps: placement of money, laundering of money, and integration of money. These are 3 steps in which money laundering is done. Number 1, placement of money. First of all, the criminal money which you have earned, the illegal money which you have earned, you inject it in the economy using some medium, some cash-rich business like dhabas, or you deposit cash in many people's bank account. Any of these ways you use this money. You induce this money in the Indian economy, in the financial system. You induce this money. Placement. Then second is layering. You layer this transaction in such a way that no one is able to understand what is the actual source of this money. So Mr. A gives 1 lakh cash to 10 family members. Those family members deposit in cash account. This is known as layering. Okay. And layering means you are hiding that money in such a way that no one will be able to know whose money is this. No one will be able to know. This is known as layering. So layering of money is the second step. And then third is integration. Finally, in case of integration, the money is introduced in the normal banking channel or the normal economy, and that can be used by the criminal for any purpose, whatever he wants. Yes, he might be required to pay some taxes, which is okay with. he doesn't he doesn't want to not pay taxes. It's okay for him to pay taxes, but his illegal money is turned into legal. That is a very good thing that he has earned. So the third thing is integration. So these are 3 steps in which the laundering is done. So what is placement? Placement means how and where the illegally obtained funds are placed, which means where to deposit these funds at, either in the bank account or buy a property in Benami Act, Benami property where name is not disclosed of the owner. How to use this money in Indian economy. That's the first question that we need to ask, and that is done by placement. Injecting funds into financial statement by breaking it into small parts, like payment to cash-based businesses. If they are cash-based businesses like dhabas is a cash-based business where entire income is earned in cash. Similarly, guys, small sweet shops, water shops, or small shops of small things, they are all cash-based businesses. Like dhabas, restaurants, small restaurants. Payment for false invoices. Yes, those dhaba can pay you back through false invoices. False invoices can be generated and dhabas will pay you back. And guys, usually, in such situations, maybe dhaba has got some composition levy kind of an exemption. So it is not required to disclose the source of this particular, expense. So only 1% GST is required to be paid, composition levy, restaurant business. So even GST is almost exempt. Okay, 18% is also almost exempt, because the person will fall under the category of maybe composition scheme, right? So yes, there are ways in which all this money laundering can happen. False invoices, smurfing, put small amounts of money into bank accounts, into many bank accounts. Okay, so you put small amount of money into many bank accounts. That is another way of placement of money. Moving money into trust and offshore companies. So you can move your money from India to outside India in some companies which are shell companies, which are not actual companies. These are shell companies. So you move your money outside India. That is also another way of placing your money. That hide the beneficial owner's identity, using foreign bank accounts and aborting transaction shortly after funds lodged with a lawyer or a accountant. So foreign bank accounts is again a menace. Many people deposit their money in foreign bank accounts, and their names are kept secret. Yes, so I'll give you a very live example. So after BJP took over in the central in India, they decided to do one thing. They had tie-ups with Switzerland government, and they wanted names of all the Indians who hold Swiss bank accounts. Yes, many Indians, including, and this is just a rumor, including entire Gandhi family. Entire Gandhi family has got Swiss bank accounts in Switzerland that have several crores and crores of rupee, of Indian rupee, that is deposited in Swiss bank accounts, which is in name of the entire Gandhi family. And why only Gandhi family? The entire politician chain of Congress and BJP hold heavy bank accounts in Switzerland banks. This is the rumor. So BJP asked the Switzerland government that please share the names and addresses and identity of all the Indians who are holding Switzerland bank accounts in Swiss banks. Please give me all those details. Government of India asked Government of Switzerland. Government of Switzerland denied. Government of Switzerland said no. This is breaching the privacy of my account holders, and these people have shown utmost trust in me by placing their money in the bank accounts of Switzerland. We cannot break their trust. This was the answer which was received by Switzerland government, from Switzerland government to Indian government. So again, the matter boils down to the fact that whether depositing your money in a foreign bank account is a good way. Depositing your money in a foreign bank account is a good way for money laundering. Whatever illegal activity you do that illegal activity and you deposit that account in a foreign bank account and you are through. Then you can go to Switzerland, own a big lavish villa, own a yacht, own a complete small island, and stay there for your entire life at ease in very comfortable lifestyle. This can happen, right? So yes, this is another way of placement, which is foreign bank accounts. You can place your money in foreign bank account. Then you do layering. Layering means you try to hide the the transaction into multiple layers of transaction, so that everything gets confused. This is known as layering. Layering means separating the criminal funds from their source. We separate out the criminal funds from their source. spread into various alternative transactions in order to hide original funds to different accounts, to various account holders, to various countries. We spread our funds to, various accounts. It involves converting the illicit proceeds, illicit means illegal proceeds, into another form and creating complex layers of financial transaction to hide the funds, origin and ownership. So guys, sometimes there are shell companies, holding companies, subsidiary companies, subsidiary companies, subsidiary companies, subsidiary company, and there are so many complex web of companies that funds are transferred from one company to another company, and you cannot just envisage where did the funds ultimately go, which company did the funds ultimately go to, and who utilized these funds, because the companies would have some foreign companies also in their web, in our entire chain. So you would never know where did the funds go. Funds would vanish somewhere. Company will transfer funds to another company, to another company, another company, another company. One company is in UK, one company is in USA, one company is in British Virgin Islands, and the fund gets transferred in the entire loop. So you would never get to know who is the owner of these funds. 100 crores lying in one company, and you don't know who's the owner of these funds. This is a scenario which is layering happening. Criminals do this to hide illegal funds, so it will be hard for the AML, anti-money laundering investigators to trace the transactions. Then finally, integrations mean we will re-enter the laundered funds into economy. We will introduce the laundered money, the white money into Indian economy, and the criminal will do whatever they want with this money. They will use this money for their own legitimate sources. Okay, this is the last level, integration. Combine in such a way that original crime is very difficult to trace. We don't know where the original crime happened. This is sometimes done by investing in real estate or luxury assets. It allows launderers or criminals to increase their wealth. Okay, sometimes second-hand goods are purchased, second-hand cars, second-hand bikes, motors. So while you are giving funds for second-hand, generally it is paid in cash. No bank transactions required. So very simple money laundering can happen in this way. The funds will be hidden in cash. They will be used to buy any of the properties. Luxury assets are can be bought from this laundered money. Okay, so this is how the three process happens with respect to the money laundering. Now, what are the laws which are there in the country? Strict laws are there, strict regulations are there, strict legislation are there for anti-money laundering. To stop money laundering, there are strict laws which are proposed in the economy, in the Indian economy. What are those laws? What are those regulations? We are going to study that now. So financial institutions must undertake the following measures to meet compliance requirements. So first, buck stops at the financial institutions. Banks are the epicenter of any money laundering which happens. So banks will have the first knowledge of any money laundering which happens, because it will happen only through a bank. It will always happen through a bank. So bank will be the first person to know that yes, money laundering has happened, or yes, the money laundering has taken place. So bank will be the first person to know if bank applies some due diligence. So financial institutions must undertake the following measures to meet the compliance requirement. Number one, KYC. Without KYC, there shouldn't be any bank account which should be opened. There shouldn't be any demat account which should be opened. You should be aware, bank should be aware, who is this person who's getting his bank account open or who's getting his demat account open. Who's this person? His photograph. And today, moving photographs are required to be taken. Moving photographs means you are either you are blinking your eyes while taking the photograph, so that it's a proof that that person visited the branch for doing KYC. It's a proof. I did it just now. So the photographer told me that please blink your eyes constantly while I'm clicking your photograph or while I'm clicking your video. So it's a proof that that person visited the bank branch physically. There's no some photograph of any person who's pasted while doing KYC. So KYC norms are very strict now, and KYC has to be there. Without KYC, you cannot open a bank account. If you have a bank account, it will be freezed if KYC is not done. So that is the first and foremost requirement from banks. Ensure legitimacy. Large currency transaction reporting, very, very important. CTR. If there's any huge cash deposit in bank or cash withdrawals from bank, that should be reported to Government of India immediately. If you have either withdrawn your money from bank or you have deposited a lot of money in bank, this kind of a situation is happening, then you definitely have to definitely have to report this to Government of India. So large currency transactions have to be reported to Government of India. Requirements call for institution to file a report for transactions above a certain threshold made by single customer during our business day. If in a business day there's a threshold above which the currency transaction should be reported. Suspicious activity monitoring and reporting. Now the banks should ensure that they have a forensics team. We have already studied forensics in our last chapter. Bank should always ensure that there's a forensic teams which is there in bank all the time, and the work of forensic team is that they'll take care of whatever transaction take place, and if there's any suspicious activity which has happened, the forensics team will ensure that that suspicious activity is unearthed, that suspicious activity is found out. So that is how the suspicious activity unearthing should happen using the teams which are doing forensic audit of a particular bank. So forensic audit team should always be there. Regulatory agencies publish AML guidelines. If an AML investigator uncovers the behavior that exceeds the reporting threshold and has no apparent business purpose, they file a suspicious activity report, which is known as SAR, or suspicious transaction report. So banks should be very vigilant in truly disclosing these reports to Government of India and truly disposing these activities to Government of India. That is very, very important. Now, sanctions and compliances, the regulatory bodies like FATF, a very, very strong body which has been established, and shortly we will go through all the organizations which have been established for combating this menace called the money laundering. Okay, one of the major ones is FATF. FATF is the Financial Action Task Force. Financial Action Task Force on money laundering have requirements of financial institution to check the transaction parties against list of sanctioned individuals, companies, institutions or countries. Now there is a list which has been released by the FATF, and they tell the banks that if any transaction happens between these two parties, or this party is involved in the transaction, or this country is involved in the transaction, then you have to report to us. You have to report to us. I'll give you a very live example of what happened with one of my clients. One of my clients had a exporter in China. So he was exporting goods from China to India. My client was the importer in India. Okay, he was importing goods from China to India. Okay, now while importing goods from China to India, some of the FIRCs were not filed. Some of the invoices were not filed to Government of India, to RBI. That was the reason why this payment is being made to Chinese company. The fact that import has happened was nowhere disclosed because FIRC was not filed, the import documents were not filed to Government of India. So RBI raised a question. They issued a notice to my client asking them, why have you paid money to China? Why have you paid money to China? There's no import evidence corresponding to that money. Why have you paid money to China? This was the question asked from my client by the RBI. And what was the reply? Reply was that, sir, no, we imported goods. These are the list of goods. These are the documents. We forgot to file those documents with Government of India earlier. We did not file FIRC. So, the Government of India has got intelligence, has got vigilance departments where they are actually eyeing each and every transaction which is coming from a specific country or from a specific person or from a specific company. Those countries, those companies and those individuals are named as the sanctioned individual. There are some sanctioned individual, sanctioned compliances are there. So those sanctioned individuals, sanctioned companies and sanctioned institutions and countries are restricted to carry out any transaction, and therefore the restriction which is there to carry out any transaction, bank should immediately report to Government of India that yes, this country is doing some transaction without any knowledge of what is the source of this money. Why is this money being transferred to China? We don't know. Bank is saying we don't know. So this reporting should happen mandatorily. FATF and crime networks are there. The Financial Crime Enforcement Network is now on mission to safeguard the financial system from abuses of financial crime, including terrorist financing, money laundering and other illicit activities. FATF is to devise and promote the international standards to prevent money laundering. FATF primary purpose is to ensure stability of international monetary system. So FATF is not only for India, it's for the entire world. Entire world is facing money laundering menace these days. So FATF is developing standards which will help all the countries to combat this menace called the money laundering. So obviously guys, since Switzerland did not support us, we could not find people who were doing money laundering from India. If Switzerland would have supported us, we would have found the list of people who are doing money laundering from India, right? So we need support from the foreign countries also for combating money laundering, because the most one of the most commonly used way of money laundering is to transfer your money to outside country like Dubai, Kuwait, Singapore, Sri Lanka, or Switzerland. It's a very easy way of money laundering. So if we don't get support from these countries, then we are nowhere. We won't be able to do anything. And that's what happened in Switzerland case. Okay. So FATF wants international monetary system to be free from money laundering, and therefore international cooperation is sought by FATF for money laundering things. Okay. Technology and anti-money laundering. So what is the technology which is used for anti-money laundering activities or any anti-money laundering steps which are to be taken? What is the technology which is to be used, and what is the anti-money laundering activities? So the data analytics like AI is necessary to detect unusual transactions. It is being used, AI is being used extensively. Okay. Artificial intelligence, I hope you are aware about AI, huh? Artificial intelligence. So artificial intelligence is being used extensively to detect unusual activities, unusual transactions of money laundering. Monitoring transactions, customers, and entire network of behaviors. These techniques can be used for suspicious activity monitoring. We want to monitor the suspicious activity which is happening, with respect to financial crimes. Then intelligent alert prioritization. We should be alert even before the transaction has happened. We should be alert that yes, there's something fishy which is going on. That alert should be there. Alert or case enrichment to show AML investigators relevant images, prior cases, SARs, third-party data maps, transaction history. Alerts and case enrichment should be there. Automated SAR filing should be there, while by natural language generation and processing to transform data into language and stories. So automatic SAR filing should be there. Bank should not be having any manual way of reporting the transaction to Government of India. There should be a system where automatically, wherever a transaction happens which is unusual in a particular date, should automatically go to Government of India. There should not be any manual intervention of bank, that bank will check it and give it. Should be automatic. Then client risk rating, you should always rate your clients, rate your risky clients, and in the system itself you should have some indicator that yes, this client is risky, this client has got some hanky-panky stuff which he can carry out. So that alert, that risk rating of the client should definitely be there. So client risk rating should be there in every financial institution. So these are certain steps which anti-money laundering should use along with technological intervention, because technology is very important. Technology is very important for anti-money laundering, and to combat money laundering, technology will definitely be used. Because guys, let me tell you a very practical thing. In a single day, crores and crores of transaction happens in bank accounts all over India. Crores and crores. You only think 2-3 transactions you do in your bank daily. You pay for Golgappas, you pay for classes, you pay for your dress that you have ordered from Myntra, you receive money back from Myntra where dress you have returned. So 4-5 transactions per day each one of you is doing in your bank account. So think about the entire economy. How can a bank monitor the entire economy, economic transaction which takes place through his bank? All the clients, how can he do it? It is not possible without technological intervention. Technology is required to report the suspicious activities, and AI is getting very powerful these days. AI can do anything which you ask it to do. So yes, AI should be used for identifying the unusual transactions and then inquiring, reporting those unusual transactions, and then inquiring about those unusual transactions. So yes, technology will form a stepping stone. Technology will form a basis of your anti-money laundering activities. Now there's the act which has been developed. This is an important act from an exam standpoint, because a question might be asked from this particular act, and I've told you that from this chapter there will definitely be one question in the examination. Definitely one question is mandatory from this particular chapter. So it's a very, very important chapter, and the question will most likely come from the act itself. Okay. Now, what is the purpose of this act? Prevention of Money Laundering Act, PMLA 2002. The purpose is to prevent money laundering. This act came into force on 1st July 2005. It helps to provide for confiscation of property derived from or involved in money laundering. So whatever property someone has acquired, be it cash, it can also be cash, it can be bullion, or it can be land or building, any property, any kind of property that you have acquired using money laundering. Okay, land, building, or some car, luxury car or vehicle or any other kind of thing. whatever property you have acquired using money laundering, using illegal sources of money, whatever property you've acquired, to confiscate that property. Government has the right to take that property away from you. Confiscate means take away from you, and that is why PMLA is under force. Confiscation means take away. So whatever property you acquired, be it cash, be it bullion, be it gold, be it land, be it building, be it car, vehicle, anything, even bank account, if you have that money in your bank account, that is also your property. Okay, if you have cash or you have money in your bank account, anything that you have for developing the developing your money, for hiding your money, for layering your money, or placing your money, whatever asset you have developed, that asset will definitely be categorized as asset which is developed or acquired through money laundering, and therefore it will be liable for confiscation under this act. This act will take away that asset from you. Okay, this act is so powerful. Objectives of PMLA: to prevent and control money laundering, to confiscate and seize the property acquired from money laundering, deal with any other issue about money laundering in India. So the idea is to confiscate money, to take away the money which is acquired through money laundering. So what do you mean by money laundering? Where a person found to have directly or indirectly attempted to indulge or knowingly assisted. Okay, this is very, very dangerous. Just now someone claimed that, I think Rohit claimed that, sir, chartered accountants and cost accountants and all the professionals tell you how to do money laundering. Someone commented, right? So for them also there's a law. This money laundering law is applicable for them also. Knowingly assisted. So if someone assists in money laundering activity, okay, the one who's indulged, of course he'll be liable, that's okay. But one who assisted shall also be liable for money laundering, and he shall also be punishable in this act. It's very strict act, guys. So knowingly assisted, the one who assisted in money laundering, he is also liable for penalty in this act. Knowingly is a party who's dealing in the transactions or is involved in one or more of the following processes or activities with proceeds of crime, namely concealment of money, possession of money, acquisition of money, use of money, projecting it as untainted property, projecting it as clean property. You're demonstrating that it's a clean property, or you're claiming that it's a clean property. Okay, if you're doing any of this stuff, then you will be held liable under the PMLA Act. Proceeds of crime means acquiring any property directly or indirectly by a criminal activity relating to scheduled offenses. So if you do some offense and due to that criminal offense you acquire some property, that is known as proceeds of crime. The value of such property taken or held outside the country, then the property equivalent in value held within the country. This is a very important clause. This is a very, very important clause. Okay, I'll tell you what is this clause. So this clause says that, suppose this Mr. A. Mr. A has 20 crore rupees of property which is acquired through laundered money, illegal sources. And what he did this with money, this money, he bought a bungalow in Dubai. He bought a bungalow in Dubai, right? Also, Mr. A has 50 crores of white money, the money which he earned through his business, authentic money, no illegal money, white money, okay? And through 50 crores, he bought a very big villa in Bombay, in Mumbai. He has a villa in Mumbai. Now, the tainted money is this money through which he bought this property. Government of India cannot confiscate this property because this is outside India. Government of India does not have power to go outside India and confiscate this money. So what is this clause? This clause is very, very dangerous. This clause says that equivalent value. So this property is for 20 crores. Equivalent value Government of India can acquire from his Indian asset. So 20 crores worth of property can be confiscated in India if the laundered money is sent outside India and the property is earned outside India. So government has right over the white money also in India of such person who's acquired laundered money and has transported that money outside India. So please read the last line. Last line says, value of any such property taken or held outside India, then the property equivalent in value held within the country. So property equivalent in value held within the company, within the country, that value will be confiscated. That value will be taken away from the person who's acquiring the property in India. Okay. So that is how the Money Laundering Act works. It is very strict. A, it is also applicable to the professionals who are assisting in doing these activities. B, they can even confiscate your White money, they can even confiscate your money which you have earned from legitimate sources. From good sources you have earned money, they can also take your money, that money also. So it's important to be very sure about what you are doing, because this act is very strict act. Then scheduled offences are offence under part A of schedule: drugs, bombing, crime, etc. Offence in part B of the schedule if value involved in the offence is more than 1 crore. This is, offence in part B. Then part C, trans-border crimes. You are involved in donkey. You know what is donkey? Donkey means you take money from India, from that person, and you transport that money to transport that person to a foreign land using illegitimate sources. That is known as donkey, cross-border crimes. So these are the scheduled offences against which, if you earn the money, then you are charged under PMLA Act. Attachment of property under PMLA Act. Now there is difference between attachment and confiscation. There is a difference between attachment and confiscation. What is the difference between these two words? Let me explain it to you. Now, Government of India is in doubt. Okay, there's a doubt in Government of India's mind that there is a person in India called Nidhi Gupta. Okay, she is a super rich person. Okay, she has many properties in India. In entire Delhi, she has many properties. Her father is a accomplished businessman, very rich businessman. On her birthday, she throw parties worth crore and crore rupees in Taj, Hyatt, and she calls all her friends, and she enjoys her birthday like anything, and she spends like a millionaire, a billionaire. Government of India is in doubt that this girl Nidhi Gupta has got some laundered money. She is not having clean money. Government of India has got some proof. Government of India have got some indication. So Government of India wants to start investigation. Okay, now the properties which Nidhi Gupta owns, Government of India wants to start investigation on all these properties. Now, as soon as the investigation will start, Nidhi Gupta is very smart. What she'll do? She'll sell off all these properties to third parties. She'll sell it off. So that Government of India doesn't know the cannot investigate into these properties, and they don't know the real the reality behind these properties. Government of India is not able to know. So as soon as the investigation starts, Nidhi Gupta will sell off these properties to someone else. Government of India will lose the investigation point. To stop Nidhi Gupta from doing this is Government of India attaches all the properties, not confiscate. You cannot confiscate property unless until the guilt is proved. Unless until it is proved that Nidhi Gupta is held guilty of money laundering, you cannot confiscate the property. No. But for the time being, you can attach the property. What do you mean by attachment of property? Attachment of property means till the time case is going on, Nidhi Gupta cannot sell this property, cannot dispose of this property, cannot give it away to anyone, cannot exchange this property, cannot do anything with this property. Her ownership rights are in effect halted or paused. This is known as attachment. It's not confiscation. Government of India is not confiscating this property. Government of India is not snatching this property. But Government of India is reducing rights of Nidhi Gupta to use this property, to dispose of this property. Yes, she can use them. She can stay in them. She can rent it out. She can do whatever. But she cannot sell these property. She cannot dispose of this property. This is known as attachment of property. Attachment means prohibition of transfer of property, conversion of property into something else, disposition of property, or movement of property by an order under PMLA. This step is taken to ensure that the suspect, we are just suspecting that there's some problem with this guy, there's no proof as of now, doesn't misappropriate, that is sell or dispose of the assets during the period which trial goes on. So we have to ensure that during the period in which trial is going on, the suspect does not sell off the property or dispose of the property. The attached property will be confiscated after the guilty judgment has been passed. Once the judgment has been passed that yes, this person is guilty, there is a lot of laundered money which has been found, and this money is actually earned from illegal sources. When this is final, then that property can be confiscated. Then that property can be snatched away from this particular person. Okay, so this is the difference between confiscation and attachment. Now, can arrest happen in case of money laundering? Yes. This act is so strong, this act is so violent that arresting powers is also there in the Act, PMLA Act. Yes, you can arrest the person who is involved in money laundering activity. So we have another student, Rohit Raj. Okay. So we find that there is a material on record that the person Rohit Raj is involved in money laundering activities. What he does is smuggling of diamonds. So diamonds are some things, gold, silver, diamonds, these precious metals are something which only government of India can sell to outside the country people. You cannot sell these things to outside country, you cannot bring gold to India. So gold, precious metals is something which only government of India can trade, no one else can trade with outside countries. But what Rohit Raj does is he goes to Singapore, he buys a lot of gold, 5-6 kgs of gold, and he puts that gold in his entire coat and pants and trousers. Over here gold is there, inside small biscuits are there. He lices himself with golds, he packs himself with gold, and he brings it to India and he sells it off in India, because in India gold is expensive, in Singapore, Dubai, gold is cheap. So he does that. While he does that, this activity is definitely charged for arrest. Arrest is possible. Rohit Raj can be arrested for this activity. This is charged for money laundering. It is apparent, it's very obvious that he is doing money laundering. So in this case, a person can be arrested if the concerned authority, based on material in their possession, has reasons to believe that such person has been guilty of offence punishable under PMLA, and reason for such belief has been duly recorded in writing. So the adjudicating authority, which is AA, would in writing, pass an order that yes, Rohit is guilty of misconduct under this act. They can even charge Rohit behind the bars. Rohit can be behind the bars. Is bail possible? So the offence under PMLA is cognizable. It is a cognizable offence, but non-bailable. You cannot have bail under this particular act if jail happens. Okay. And what do you mean by cognizable offence? Cognizable offence means offences which are not very very strict offences, and those offences can be tried by the police itself. Police can start investigating the convict even before putting him before the magistrate, the district magistrate. It can the police can start its proceedings, the police can start its trial, the police can start the asking questions from the person without even putting before the court. So that is known as a cognizable offence. So PMLA is a cognizable act and it is non-bailable, which means you cannot apply for bail if you are convicted under PMLA Act. The provision of PMLA do not provide for any right to seeking anticipatory bail. Anticipatory bail is also not there for PMLA Act. Now, what is anticipatory bail? Anticipatory bail means when you suspect that someone is raising some charge against you, which can be false, which can be not true, then you can apply for anticipatory bail. Simple, someone you met with a quarrel with your any of the employees, and you think that the employee will charge you with some serious offense which is false. Okay, he might charge you with a conviction that the boss tried to hit me, the boss tried to kill me, and that calls for a immediate arrest. Okay, if someone charges you of killing them, then it calls for a immediate arrest. But the moot point of consideration is that this arrest or this this is fake. On fake allegation this has been made. So you can directly approach magistrate and tell him the entire story and ask him for an anticipatory bail. So anticipatory bail is that concept, but it's not applicable on PMLA. For PMLA you cannot apply for anticipatory bail. Okay, sir. Then summon, survey and search. This act has given the power of summon, search and survey on the persons who are found guilty or the persons who are convicting for offence under PMLA. So what is a what do you mean by a survey? Survey means the officer believes that survey will allow him to opportunity to inspect the necessary records. So the officer can survey the property and premises which is in ownership of that particular person, help verify the proceeds of crime and any transaction related to the proceeds. So survey can happen inside the premises. You can be authorized to go of the convict and see and analyze that entire premises. Search and seizure. Agreed person on the basis of information provided by him on possession in writing indulge in monetizing the possession of any proceeds of crime. So the officer can search that entire premises, can gather information of that premises, and can also seize certain assets. So if the officer enters into premises and he sees that there are gold biscuits which are kept in that premises, which might have been bought using the laundered money, they can seize those gold biscuits. So seizure power is also there. They can seize means take away the gold biscuits. So, Mr. A is found a little bit suspect in a money laundering case. Police raids his home. In his home, they find gold biscuits. Obviously, the police is going to confiscate those gold biscuits, seize those gold biscuits for the time being for further investigation. Then power to search a person. The power is also given to search a particular person. Authority, when the authority has reasons to believe in writing that any person has secreted about his person or possession, ownership, control, or any record, they can have power to search a particular person also. So summoning is possible, survey is possible, seizure is possible, search is possible. All these things are possible under the PMLA Act. Retention of records under PMLA Act. So the authority which had raided that particular place, had raided that particular premises, if they fetch some books of accounts, if they fetch some records and details which tells that there is some hanky-panky stuff which was going on in this particular place, they found some notings, they found some diaries where some details of foreign people were given. All these things can be retained by such officer. So retention of books of accounts under records under PMLA. Where any records have been seized under section 17 or 18 or frozen under section 17(1)(a), the concerned officer must within 180 days produce such record before the adjudicating authority, who may decide whether the records are required for detection of money laundering or not. So within 180 days, those records are to be presented before the adjudicating authority. The officers will try to prove that, sir, we require these details, for further analyzing whether money laundering is there or not. And client will always say that no, these things are not required. These are very generic things which they have taken from my home. This argument will be settled within 180 days by the adjudicating authority. Now the AA, the adjudicating authority, may permit retention. Either they'll say that okay, you permit retention, you keep the records with yourself, or they can release such records. Whatever is done by the adjudicating authority. The person from whom records are seized or frozen shall be entitled to obtain copies of the records. So yes, copies of those things can be given to that person whose records are there. Interconnected transactions, very, very important, guys. Interconnected transaction. Okay. Now, what do you mean by interconnected transaction? There is a person, Mr. A. Mr. A has been a suspect in money laundering case. Government of India has got some proof that money laundering has been done by Mr. A, and those money laundering activities are done by Mr. A, which are for which the details are given to Indian government. Okay, so Mr. A is convicted of money laundering activities. Now what happens is, the first and foremost thing that will be seen for Mr. A is his bank statement. His bank statement. Okay, that what kind of activities or what kind of inflows and outflows are there in his bank statement. And in his bank statement, there is one record of Mr. B which has consistently been coming in. B sending money to A receiving money, A then sending money back to B. So there are very frequent transactions between A and B. Recurring interconnection between A and B. So the PMLA Act has got such great powers that it can also investigate Mr. B's transactions. They can go to Mr. B and they can investigate Mr. B's transaction also. Interconnected transaction can also be investigated under the PMLA regime. So even when B is not charged with any offense, is not charged with any conviction, even then B can be analyzed, or B can be suspected by the PMLA Act, and he can be charged by the PMLA Act. So this is very much possible. So interconnected transaction, where any transaction proved to be involved in money laundering, it may be presumed that any interconnected transaction, the transaction which are interconnected with this transaction associated with money laundering, can also be inquired. Presumptions and onus of proof. The presumptions are absolute and onus of proof of the same otherwise lies on such person. So the onus of proof means to prove that I am not guilty. Mr. B has to prove that he is not guilty. He is not involved in any money laundering stuff with Mr. A. Mr. B has to prove it. Okay, onus of proof is on such person. Any person accused of offence under section 3 of PMLA whose property is attached and proceeded against for confiscation shall discharge the onus of proof vested in him by disclosing the source of income, earning or assets out of which or means by which he has acquired the property attached, and discharge the burden that property does not constitute proceeds of crime. So you should be able to understand, you should be able to explain to Government of India that yes, this property has been obtained by me through legal money, through white money which I have earned, my hard earned money. this property has been constructed. This proof is to be given by this person to Government of India. Then powers under the Act, there are many powers under the Act. Power to summon, the additional director or the joint director, assistant director has the power to summon any person. Attendance is required of any person to give information about the anti-money, money laundering transaction which has taken place. So summoning a person means calling a person. Summon means calling a person to the office and inquire. So known as calling. Second is to record statements. So the adjudicating authority, the director, additional director have power to record statements of people who are involved in such transactions, and they can also collect evidence to prove that the person is suspect. Okay, collection of evidence is also power which is granted in this act. So this act is quite detailed. This act is quite quite thorough, and this act involves a lot of powers which are given to many authorities. Usually these criminal powers are given for criminal activities, okay, but these powers are given for non-criminal activity also, which is money laundering. This is a financial activity. This is a white collar crime. Ek tarah se, this is a white collar crime, guys. Like we had discussed white collar crimes yesterday, this is sort of a white collared crime. Now, the legal and regulatory framework in India for combating the money laundering activities. There are many organizations which have been actively working for combating money laundering in India. Some of those organizations are as under. Number one is the FUIND, the FUIND transaction, the Financial Intelligence Unit in India. FUIND, its short form is FUIND. What is the role of FUIND? FUIND is a central agency for detecting and analyzing suspicious financial transactions. It detects and analyzes suspicious financial transactions. Key roles are it collects reports. Reports means it collects information, it collects data. It collects data of cash transactions, of suspicious transactions, okay, cash transactions, suspicious transactions, NPO transactions. NPO means non-profit organizations. So guys, these days non-profit organizations are hub of terrorist attacks. Non-profit organizations are actually funding terrorists. The most of the terrorist activity are happening through non-profit organizations also. Charitable and religious trusts also are engaging into these stuff. So NPO transaction should be reported to Government of India. Cross-border wire transfer reports. So money is being transferred to China, money is being transferred to Japan, or money is coming in from Afghanistan to India or Pakistan to India. Then all these reporting is being done. Immovable property transaction report. If any immovable property is being sold and purchased without any authentic source of income, without any authentic person being involved in the transaction, then again this is taken up by FU India. Analyzes the data to find signs of money laundering. If there is any sign of money laundering, that is to be analyzed. Shares relevant information with the enforcement agencies like CBI, ED, police, etc. Regulators like RBI, SEBI, etc. Foreign FIUs, it shares information which it gathers and analyzes with various concerned persons. Act as central repository of financial intelligence. So data churning, the whole and sole responsibility of FU India is data churning. They churn the data, analyze the data and identify the culprits. They don't act on the culprits, they just identify the culprits. That is the work of FU India. Then of course we have Enforcement Directorate. You have seen so many news reportings that today Enforcement Directorate raided this actor or this politician or this ex-RBI head or this ex-CJI Chief Justice of India. We have seen so many reports of ED doing raids. Where does the ED get report from? FU India. FU India gives report to ED and ED raids those people. Okay. So ED is responsible for enforcing PMLA and taking action against money laundering. FU India collects data only. They don't take action. Action is taken by the ED. Key responsibilities: investigating money laundering cases, then trace secure assets derived from crime. Whatever assets are derived from crime, they will trace those assets and they will secure those assets. File prosecution cases and assess special courts. They would have the court cases running in. Then they would confiscate the properties, take away the properties where the crime is proven. Wherever it is proven that yes, this crime has happened, they will confiscate the property. ED can do this. Powers is impose penalties. They can impose penalties. They can provisionally attach the property. They can devoid you of your rights to sell the property or dispose of the property or rent out the property or exchange the property. They can attach the property. They can conduct survey, seize or search. They can search person or arrest suspects. They can retain property and records. This is the power which is given to ED. Yes, RBI also acts as a nodal agency for stopping money laundering. RBI, Reserve Bank of India. RBI issues, enforces KYC and AML guidelines for the banks to follow. That is the main thing which RBI does. RBI doesn't get involved in the investigation bit, but they ask the banks to be very strict, to be very vigilant, to be absolutely prompt in reporting any suspicious transaction, unusual transaction, and to have their KYC norms absolutely perfect. None of the customers should be there in the bank whose records are not there with the bank with respect to his identity, with respect to his true disclosure. This is the role of RBI. Okay, so key focus is customer due diligence. Every customer should be onboarded only after doing its due diligence. Due diligence means inquire about authenticity of the customer. Inquire authenticity of the customer. We have to inquire authenticity of the customer before boarding the customer, before onboarding. Before onboarding, we need to inquire about the authenticity of the customer. Enhance due diligence. Wherever the bank feels that there's need for some additional, due diligence, some additional things to be inquired, then enhanced due diligence is possible. Ongoing monitoring for transaction. We need to monitor transactions which are happening on a day-to-day basis. I know it's very tough because lakhs and crores of transactions are taking place daily. Bank cannot, trace each and every one, but there are tools, there are softwares, there are AI tools that can help banks in doing this. Okay. Reporting obligations under PMLA. They should report the suspicious transactions to Government of India. So this reporting should definitely happen. SEBI is the biggest, largest body with respect to, shareholders and share market is concerned. This is the biggest body ever created in India. Regulatory body which regulates the share market, and it ensures that shareholders' value is not declined. Shareholders' value is safeguarded. So what are the roles of SEBI? SEBI ensures compliance with PMLA in securities market. It covers the brokers, mutual funds, stock exchange and other market intermediaries. Again, SEBI ensures that KYC is done of each of them so that they cannot do any hanky-panky stuff with respect to the share market. They cannot erode the wealth of the shareholders. Other regulators are there, IRDA, Pension Regulatory Fund, other financial bodies are there. These bodies are also, ensure that PMLA is compliant. These bodies also take adequate measures. So if in a nutshell we analyze what are the roles of these bodies, FU India analyzes the financial intelligence, which means it collects and analyzes the data and in the information. Second is ED investigates and prosecutes money launderers. RBI enforces PMLA in banking sector. SEBI enforces PMLA in security market, the SEBI enforces PMLA. Other regulators ensure PMLA compliance in other sectors. This is done by the other regulators. Then we have international standards on combating money laundering. What are the international standards in combating money laundering? What are the international, international things that we need to do? I already told you, unless and until the entire world comes together, money laundering cannot end. Entire world should come together. All the countries should cooperate with each other. All the countries should do that. It's not only one country that can combat money laundering, because the easiest way of money laundering is putting money outside the country. Take your money outside the country. That's the easiest way of money laundering. So we want all the countries of the world to come together to sign a treaty, to sign a pact that full disclosure will be done for all the people who are belonging to that nationality, who have assets in their country. So Indians, politicians, actors, they have big huge bungalows in London, in Paris, in USA. They have lands taken in USA. They are owner of lands in China. Chinese people have lands and flats and property in Singapore, in Malaysia, in Indonesia. Chinese people, residents, have properties in Singapore, Malaysia, Indonesia, all these countries, even in India. So this cross-border economic activity should be monitored by each of the countries, and transparent reporting should be there by each country to each other countries. Transparent reporting should be there, so that every country knows that our citizens are investing where and what. Like the example of Switzerland, bank account, I've told you that Swiss government is just not ready to share those details with the Indian government. They're saying no, we are not ready to share. In fact, Swiss banks have shown resistance. Swiss banks are not ready to share that information with the Indian government, that who holds those Swiss accounts in their country, which has crores and crores of money stored in Swiss bank accounts. They are not ready to share. Now, this particular section deals with these international standards only in combating laundering, money laundering, and the financing of terrorism and proliferation. So yes, let's see what are these ways. The FATF recommendations. What has FATF recommended? FATF has recommended all these steps to combat any anti-money laundering, and each country should follow all these steps. Number 1, assessing risk and applying risk-based approach. So first of all, every country should identify, assess, understand the money laundering and terrorist financing risk for that country. They should identify the risk, they should assess the risk, and they should understand the risk. By again analyzing the transactions which is happening through financial institutions. Whatever financial institutions are doing, whatever transactions are taking place through financial institutions, all of them have to be analyzed, all of them have to be identified and assessed to understand and to be vigilant about money laundering. Second is to take action, including designating an authority or mechanism to coordinate actions to assess the risk. There has to be a formal setup in every country. Like there's few India, there has to be few Singapore, there has to be few Sri Lanka, there has to be few Chicago. Everywhere there has to be an authority that holds data that is analyzing towards combating money laundering. Every country should be vigilant enough, ensuring risks are mitigated effectively. Second is national cooperation and coordination. This is very, very required. Countries should have national AML, anti-money laundering or counterfeiting transactions or CPF policies. These risk and policies should be regularly reviewed, and countries should ensure policy makers, the financial intelligence units and operational levels have effective mechanisms, cooperation and coordination, and information is exchanged between them. So the heart or the main epicenter of anti-money laundering steps is exchange of data. If true exchange of data, if transparent exchange of data takes place, money laundering can quickly be assessed, it can quickly be found out. There's no doubt about it. Then money laundering and confiscation. Money laundering offense, countries should classify the crime of money laundering as serious offense, okay, in their laws, in their respective laws. Like India has classified money laundering as a serious offense, and it has given power under this act to even confiscate property. Similarly, all the laws of entire world, all the countries, laws of entire country should revolve around having some very strict laws with respect to money laundering offenses and with respect to confiscation. So every government should be permitted to confiscate property which is which has been earned due to money laundering. I'll give you a very simple example. So Vijay Mallya went outside India and he flew to London, UK. Okay, he flew to UK. He bought a lavish mansion in UK through that laundered money, and he was staying in UK very comfortably. He was staying in UK in London from that money laundered money. Now, unless and until government of UK has got the power to confiscate the bungalow of Vijay Mallya under their relevant act, the government will not be able to do anything. So government should be given powers to confiscate property of a person who's done money laundering in some other country also, and if he is flew to your country, then government of UK should also have powers, no? Otherwise government of UK will be able to do nothing, and government of India cannot file a case against that person outside the country. That is the problem with government of India. So each country should have very strict rules against money laundering. People who are doing money laundering in their country, they should have very strict rule, including confiscation powers. Confiscation powers should be given by the law to government of that particular country. So each country should have confiscation and provisional measures. Countries should enable their competent authorities to freeze and seize confiscate property. This power should be given by every country under the act to the regulators. Terrorist financing and financing of proliferation. This is a serious act, guys. The people of many countries are evading other countries. Illegal immigrants are there. they are migrating to their countries illegally without any legal support. So terrorist financing is an offense. Countries should criminalize the terrorist financing activities based on terrorist financing conventions. Countries should ensure that such offenses are designated as money laundering offenses. Countries should implement targeted financial sanctions. So financial penalties should be there for all the bodies, for all the organizations which are proceeding or which are growing the terrorism in other countries. So relating to prevention, suppression of terrorism and terrorist financing, prevention of suppression of proliferation of weapons, mass destruction, etc. Weapons are being supplied, cross-border weapons are being supplied to another country for sparking terror in another country. Cross-border supply of weapons is happening. So this should definitely be classified under the Money Laundering Act, and power should be given to government to combat this activity. Non-profit organization, I've told you, very, very serious offense. Some non-profit organizations are posing themselves as non-profit organizations. However, they are actually centers, epicenters for terrorism, and money is flowing in those organizations. So I'll give you a very simple example. Okay, there's a charitable trust, there's a charitable school, which is a charitable school for the poor children. They give education to poor children. So they get donations from everywhere and they invest it in poor children's education. This is the purpose of that charitable organization. Now, these people are getting donations from anti-social elements, and they're using this money for financing terror in that particular country. This money is not used for education of poor people. On the papers, it is shown that it's a school and it is educating children. On papers, it is shown like that. But in reality, the money is used to buy weapons, buy RDX, buy weapons of mass destruction. So this is how NPOs are being misused by people for terrorist activities. So you have to combat this menace. So countries should review the adequacy of laws and regulations that relate to non-profit organizations and the country has identified as being vulnerable to terrorist financing abuse. Then countries should apply focused and proportionate cost management audit for every organization to ensure that whatever funds are being received by the NPO for benefit of the children, for example, they should be applied for that purpose only, and they're not applied for any other purpose. For this, cost and management audit can be an effective tool. Okay. Preventive measures. There are some measures which change in law can prevent PMLA money laundering from happening. Financial institution secrecy laws. Countries should ensure that financial institution secrecy laws do not constrain the implementation of FATF recommendations. This is very, very important. So guys, Swiss banks have got this secrecy law. Okay, in Swiss banks in Switzerland, there is secrecy law. Secrecy law says that the Swiss government will never disclose names of the bank holders, account holders to anyone without permission of the bank holders. This is a secrecy law. But this law is actually against money laundering. It's against anti-money laundering, prevention of money laundering act. It is against that. So countries should change their law. Their law should not interfere the implementation of FATF recommendations. The secrecy law is interfering with the FATF implementations, recommendations. So any law, any secrecy law should not constrain or should not block implementation of FATF recommendations, should not block it. That is the first and foremost objective. Customer due diligence, of course, everyone should be aware about their customers, who are their customers. Bank should be aware about the customers, who are the customers of the bank, who are opening their bank accounts in the bank. So everyone should be aware about the customers. So customer due diligence and record keeping is the key for financial institutions especially. Okay, financial institutions should be prohibited from keeping anonymous accounts with no names. Anonymous account means accounts with no names, no name of owner. This should not happen. No name of owner should not be there. Okay, and accounts in fictitious names, false names, that should not happen. And after KYC, it is not happening, guys. FI required to undertake CDT measures when established business relations. Okay, when they establish business, which means when they are opening new accounts. Okay, established business relation means when they are opening new accounts. Then they should implement the KYC or customer due diligence measures. Carry out occasional transactions above applicable designated threshold. or that are via transfers. So the FII should carry out some transactions above the applicable designated threshold. They should check those transactions, okay, that are via transfers. There is suspicion of money laundering in those transactions, then they should check those transactions. FI has doubts over adequacy of previously obtained CDD, then they should check those transactions. The principle that FI should conduct CDD should be set out in law, should be a legal requirement. It should be a legal requirement that yes, every FI has to do its KYC. If FI doesn't do its KYC, then it will be detrimental for the FI, for the bank. So this should be set out in law. Record keeping is very, very important. Detailed information about the customers and the transaction should be maintained by each and every financial institution. So if a customer is sending money outside, or if he is receiving money from outside to inside India, then the bank should maintain a detailed record of what are the details of those transactions, what is the detail of those customers. For at least 5 years, they should maintain this record. At least 5 years, they should keep this record. FI should be required to keep all records through CCD measures and make them available in case required by the competent authorities. They should also make these records available to Government of India wherever required. Additional measures for specific customers and activities. So if there are any specific customers, what are specific customers? Let me tell you. There's something called a politically exposed person. What is a politically exposed person? Politically exposed person means a person who is a prominent politician. Okay, so for example, in India we have MPs, MLAs, ministers, central and state both, government officials. So they are politically exposed persons are the individuals who hold or have held prominent public positions. They were there in some prominent public position, like the CM, ex-CM of Delhi, ex-CM of Mumbai, Maharashtra, ex-CM of Gujarat. So these people have held some high position in some government authority in past. They are known as politically exposed people, and they are specific customers, which means they are high risk customers, which means that their bank accounts should be especially monitored for any unusual transaction. They are very susceptible to fraud, they are very susceptible to corruption. So these politically exposed people, their account should be pinned, they should be highlighted that yes, this account is specifically to be monitored, and this account should be monitored specifically to ensure that there is no hanky-panky stuff inside their bank accounts. These are known as specific customers. So bank should identify specific customers that yes, these customers are the customers which are at a high risk of checking and they should be checked properly. So FI should be required to conduct CDD on politically exposed person, whether foreign or domestic. FI should establish the source of wealth and source of funds of such person. FI should know what is the source of wealth of such person, what is the source of funds of such person. Conduct enhanced ongoing monitoring. So the FI should conduct monitoring, enhanced monitoring on these people specially. The requirement of all type of PEP should also apply to family members of the PEP. So even the family members should be under radar, should be under scrutiny, and close associates of such PEPs should also be under the scrutiny. It's not that we are convicting someone of doing something bad. No. We are just being vigile. We are just being overcautious that yes, these people are under high risk of corruption or money laundering, etc. So we'll keep their account as specially monitored. We'll monitor that account specially. That's the only purpose of introducing PEP. Then we have money or value transfer services. So money or value transfer services are provided by Western Union money transfer. Okay, you must have heard Western Union money transfer, or any way in which the money is transferred from India to outside India. Wire transfers are also there. NEFT can be done, RTGS can be done to outside India bank account. So all these activities can happen when you are supplying funds to outside India. Western Union money transfer is one of the leading bodies which can transfer money from India to abroad, any country of the world. Okay, so they should be carefully monitored, because ultimately they will be the main persons who who will have these transactions of something going outside or something getting received from outside to India. They should also be monitored. Western Union money transfer. Persons that provide money or value transfer services, licensed or registered, are subject to effective systems of monitoring and ensuring compliance with the relevant measures for the FATF recommendations. FATF says that along with financial institutions, along with banks, please keep a vigil on these organizations also. Okay, countries should identify unregistered, unlicensed MBTS and apply to appropriate sanctions and penalties. No MBTS should be unregistered. No person should be authorized to send money from India to China without any authority from Government of India. Every MBTS should be registered MBTS. There should not be any unregistered MBTS. Every MBTS provider should maintain list of its agents, and countries should take measures to ensure that MBTS providers that use agents include them in their AMT or CFT programs, monitor them for compliance with these programs. So MBTS should be carefully monitored, their activity should be carefully monitored, their agents should also be carefully monitored. Then we have reporting of suspicious transactions. This we have already seen that, you know, the FIUs should report suspicious transactions. Even banks should report suspicious transactions in something called a suspicious transaction reports, STRs and SARs, suspicious account report. So they should be reported to the Government of India. Reporting of suspicious transactions should be done to Government of India. FI should report the suspicious transaction to Financial Intelligence Unit. Tipping off and confidentiality. Financial institutions, their directors, officers and employees should be protected by law from criminal and civil activities, from breach of any restriction on disclosure of information if they report their suspicion is in good faith to FIUs. So yes, those who are having some transactions which they think are absolutely not a problem, they can voluntarily disclose them to FIU. This can actually help them to save the tedious process of investigation. So tipping off and confidentiality will be maintained. Okay, then there are designated non-financial businesses and professions. So guys, yes, banking transactions can be traced, MVTS can be traced, but there are certain businesses which are at high risk of money laundering. Like I told you, dhaba business in India is at a high risk of money laundering. Casinos are at a high risk of money laundering because a person who's got so much of black money, so much of laundered money, he will definitely want to go and play casino, because casinos take cash. Casinos can take bank account also, bank transfers also, but primarily they take cash. So casinos are some businesses which are high risk businesses. Real estate agents, anyone who has cash will try to first invest it in real estate, because real estate today also is a very cash friendly industry. You want to buy a house worth 2 crores, you can buy it entirely in cash. You need not pay even a single rupee of bank you need to pay. You can buy it in entirely cash. So these are certain businesses which are high risk businesses which are to be taken care of. Due diligence is required in these businesses. Casino, real estate, dealers in precious material, that is gold, silver, diamond. Okay, so all these dealers should be closely monitored by Government of India. Then lawyers, notaries and other independent legal professionals, accountants, these guys are the epicenter of consulting on how to do money laundering. Lawyers, accountants, so these are also people who are actually managing their clients' securities as a asset. They are buying, selling real estates. Okay, they are managing banks, savings accounts. They are managing organizations for their contribution of funds, creation, operation, management of legal persons. So all these things are done by these lawyers, notaries and other independent legal professionals. So these are the people, or these are the businesses which are at high risk of money laundering. So FATF says that the customer due diligence and record keeping requirement should also be applicable to designated non-financial businesses and professions. Okay, when they engage in financial transaction equal to or above a specific limit, they should be willing to share the data with the Government of India also, because these businesses are in itself very risky businesses. Okay, so these businesses are required to actually report to Government of India about their transaction. Sanctions mean penalties. So countries should ensure that there is a range of effective, proportionate and dissuasive sanctions, whether criminal, civil or administrative, available to deal with the natural or legal persons. So sanctions should be there, penalty should be there, so that the other person is afraid of doing some money laundering activity and running away from that country to another country. All the countries should have strict sanction policy. Strict penalties should be there for money laundering, which should be implemented on all the countries. So what people do is, they would launder money in a country like India where there's a very strong law, and they will fly away to a country like maybe Dubai, where money laundering is not that big an offense. Their government thinks that, oh, money laundering is your intelligence, it's not an offense at all, maybe. So what offenders do is, what these people do is they would have a money laundering incidents, they would do a illegal activity in India and then will fly away to a country where the law is not that strict against money laundering. Okay, that is the problem. So everyone should be on the same page. Every country should have strict legal consequences, penalties against money laundering. And therefore, there are some international conventions which should be signed by each and every country. Vienna Convention, Palermo Convention, United Nations Convention Against Corruption, Terrorist Financing Convention. This should be signed by every country. Every country should agree to the principles of these conventions, and every country should implement these conventions in their country, so that effective mechanism can be there for preventing any corruption or money laundering and any such terrorist activity that should be prevented. Now, guidance for a risk-based approach for accounting and auditing. Now, what can accounting and auditing profession, which is your and my profession, CMA profession or any accounting profession or auditing profession, what can we do to ensure that money laundering doesn't happen? What checks and balances, what risk-based activities can be done by you and me to ensure that this hanky-panky stuff doesn't happen, this menace doesn't happen? What can we do? Risk identification and assessment. The accountant should take appropriate steps to identify and assess the risk of the client by performing client and engagement acceptance processes like background checks. I've told you about background checks yesterday itself. Okay. So guys, even you and me are having this responsibility of finding out money laundering, because if a client is doing money laundering, then our audit report should also mention it. You and me also have the the onus of doing money laundering, of detecting money laundering. So these are the steps which you and me should follow to find out money laundering. Okay, so we should do a complete background check of our client. We should keep documents safe and up to date. Okay. Money laundering, terrorist financing risk can be organized into 3 categories. Country geographic risk. A client may be a higher risk when features of their business are connected to high risk country. So if we have any client which is dealing with Pakistan for their raw material, then this risk is higher for this client. Client risk. The client may itself be highly risky since it is a PEP. So if we are doing audit of a PEP, then we are already at a high risk. And third is transaction or service level risk. Certain services, certain things that our client has done that can be susceptible to anti-money laundering stuff, So we should be careful about the services or the transaction also. Identification of money laundering and TF risk associated with certain clients or category of the clients. Certain type of work will allow accountants to determine and implement reasonable proportionate measures and control to mitigate such risk. So we should be vigile while we are doing our audit, that all these circumstances which might lead to money laundering can be prevented and can be detected early, so that our audit report should contain mention of such incidents. Documentation of risk assessment. So wherever we have assessed risk of money laundering, we should document it. We should be able to document what steps have been taken to ensure that money laundering risk is not there with this particular client. This should be documented. Accountant must always document the MLTF risk for clients, countries, geographic areas, services, transactions or delivery channels. Each of the risks could be assessed using indicators such as low risk, medium risk or high risk. Okay, so risk category should be defined. A risk assessment of this kind should not only be done for each client and service on individual basis, but also assess the document risk on a firm-wide basis. So, individual should also be subject to this risk assessment. Even the entire firm should also be subject to the risk assessment. So, even the directors of the company should be assessed for this kind of a risk, and even employees, and even the entire organization as a whole should be assessed for this risk. Written risk assessment should be made accessible to all professionals having to perform the AML or CFT duties. We should be able to share this risk assessment with all the professionals. Risk mitigation. How can we reduce the risk of all these activities? Accountants should have policies, controls and procedures that enable them to effectively manage or mitigate the risk. So we should have policies, we should have proper procedures that will ensure that this risk is mitigated, which means how have we analyzed all the transactions which are there in the bank statement to ensure that money laundering doesn't take place. So that should be there. They should monitor implementation of those controls and enhance or improve. Policies or controls or procedures should be approved by senior management. Senior management should approve such policies and procedures. Training should be given to all the employees for making them aware. Initial and ongoing customer due diligence. Yes, even we as professionals must do due diligence of our customers. We must do due diligence of whomsoever are we auditing. If you are auditing a client, We are, going through their business profiles. We are churning their books of accounts. We are making their cost statements. We are making their financial statements. We are advising them for tax. Whatever we are doing, it is our responsibility that we should assess them for any kind of, ML activities. CDD, customer due diligence, should be done by us also. CDT is not only the responsibility of the bank, it is the responsibility of us also. Accountant should design CDT procedures to identify, verify each client, reliable source of documents, identify for the beneficial owner. Accountant should perform varying levels of work according to the risk level. Changes in ownership or control of clients should be lead to review or repeat of client identification or verification procedure. So if the ownership is being transferred from one person to another person, shares are being transferred from one person to another person, then full due diligence should happen that who is the person behind this transaction. Many times what happens is that we have an Indian company who's subsidiary of a foreign company. Foreign company is situated in South Korea. And that foreign company is a subsidiary of another company which is situated in America. That American company is a subsidiary of a company which is situated in Australia. There's a loop. A big chain is there. We should be able to go till the end of that chain. The first leg of that chain should be able to be recognized by the accountants or the auditors. We should be able to say that yes, he is the true owner of this particular organization. There might be a long chain to know who's the owner, but that chain should be followed and true owner should be recognized by us. Last thing we want is that, the true owner is some terrorist in Afghanistan or Taliban or some terrorist country. That is the last thing we want. Hello, mic check. So I'm saying that, yes, can you hear me? So I'm saying that, a country who's there in India, it has got a holding company in Korea, and that Korean company can be held by USA, and that US company can be held by Australia. So there can be a long chain to know who's the true owner of this particular company. We as an auditor, an accountant should know who's the true owner of this particular company. Because last thing we want is that we find that the true owner of this company is some terrorist or some terrorist organization. So therefore, it is important that ownership is to be very well known of the client to us. Public information sources may assist with ongoing review. Public sources, information sources is definitely a good way of knowing about the company. Procedures that need to be carried out differs from apparent ownership by the use of nominees and complex structures. So sometimes true ownership is hidden. True ownership is hidden by using nominees, by using complex structures like subsidiaries, long chain of subsidiaries there. So true ownership is hidden. We don't want the world to know who's the true owner of this particular company. Okay, so this should be found out by us. Procedures should be there to find out who's the true owner of this particular company. Then anti-money laundering laws and regulations in brief. Now these are the anti-money laundering regulations or anti-money laundering things which have been implemented in India, and this has been a recent development, which means only for last 10 years or 15 years these organizations have been made, or last 20 years maybe these organizations have been made, and they are so powerful in India that they provide effective measure to combat money laundering. First of all is FATF, an intergovernmental body, is responsible for setting global standards on any anti-money laundering. First one is the FATF. Second is in 2010 India became 34th national member of FATF. We became member in 2010. India has prohibited money laundering under the Prevention of Money Laundering Act, but the Prevention of Money Laundering Act is there in India to combat money laundering, and Narcotic Drugs Psychotropic Substances Act, this is also there in India. Under PMLA, the Financial Intelligence Unit has been established. FIU India was formed in 2004 to receive, analyze the process. Again, information collation is the responsibility of FIU India, which is done under PMLA. In 2005, Enforcement Directorate was introduced by Government of India to utilize exclusive powers related to investigation and prosecution under PMLA. We have established the Enforcement Directorate also. Conservation of Foreign Exchange and Prevention of Smuggling Activities Act 1974. It is aimed at retaining the foreign exchange within the nation. Benami Transaction Prohibition Act. Now this I told you many times, no? Many properties in India are registered in names of either fake owners or no owners at all. No owners, unidentified owners, anonymous owners. This is known as Benami Prohibition Act. Benami transaction is a transaction in which property is transferred to one person by another person, and the identity of the person involved is concealed. We don't know who's the next owner? Okay. So this Prohibition Act is also in place. Indian Penal Code 1860 and Code of Criminal Procedure. Indian Penal Code is the primary substantive law that regulates several criminal activities and also prescribes penalty for them. The Code of Criminal Procedures, on the other hand, is a part of procedural law and that specify procedures followed in criminal cases. Several offences under Indian Penal Code have been recognized as being schedule offences within the meaning explained in PMLA Act. So even PMLA is closely linked to Indian Penal Code, and the offence of money laundering can also be chargeable in the Indian Penal Code along with PMLA. PMLA will definitely be chargeable. Indian Penal Code will also be chargeable on this such person. The narcotics, drugs and psychotropic substance. Its objective is to stop, restrict transport and vending of narcotics. So transferring the narcotics within India is an offence. Drug trading and trafficking puts a direct restriction on the flow of money into illegitimate activities. This is again an act which has been introduced to counter money laundering activities in India. Okay. So these were the activities and organizations which are involved in money laundering and which are stopping money laundering from happening in India. Okay. Now, these are some short answer type questions, okay, which explain a little more detail about PMLA, a little more detail about the guidelines which have been provided by SEBI and RDAI for the anti-money laundering activities, what is the money laundering definition, and all these some miscellaneous aspects of money laundering is detailed in these questions. And guys, the best part is that the Institute of Cost Accountants of India is giving sometimes direct questions from this list. Okay, so this list has to be done by you. There are 23 questions which are there in this list. This list has to be done by you. I've already made you understand the crux and the entire scheme of things under the PMLA Act and the money laundering stuff. Now this will be very easy. It will not be a difficult task for you to do. So this you have to do, because a direct question from this particular list can also come in the examination. Like you can see some years mentioned against some of the questions which have come in the past examination. So this can come in the examination. So please go through this list well. And after this list, there is a past examination questions compilation. And as usual, I have a MCQ compilation, which if done properly can fetch you good marks in your examination. This is the MCQ compilation. Okay. MCQ compilation is also there. Okay. So this was your PMLA Act. So on that positive note, all the very best. Thank you so much for joining this revision series. We'll be meeting in revision series of SPM BVM maybe. All the very best and happy studying. Bye-bye.